If you're watching this in 2026 and thinking, I want to start investing, but I don't know where to begin, you're not alone. There are thousands of options: stocks, mutual funds, crypto, real estate, global investing apps, and it feels overwhelming. But here's the truth: investing is not complicated. It only feels complicated when you don't have a system. In this video, I'm going to give you a clear, step-by-step roadmap to start investing in 2026, starting from zero. No jargon, no hype, just a practical framework. By the end of this video, you'll know when you're ready to invest, where to invest first, how much to invest, and how to avoid beginner mistakes. Let's begin. Before you invest, build your foundation. Most people make this mistake. They start investing without financial stability. Investing should not create stress. So before you even invest 1 rupee, do these 3 things. Build an emergency fund. You need 3 to 6 months of essential expenses saved in a savings account or a liquid fund. This is not for returns, this is for protection. If you lose your job or face a medical emergency, you don't want to sell investments at a loss. Emergency fund first, investing second. Clear high interest debt. If you have credit card debt at 14% interest, investing makes no sense. Why? Because earning 12% returns while paying more interest is negative wealth building. Clear toxic debt first. Get basic insurance. Before growing wealth, protect it. Health insurance and term life insurance if you have dependents. Protection before growth. That's the foundation. Define your goals. Now we move to clarity. Investing without goals is gambling. Ask yourself, am I investing for retirement, buying a house? Your goal determines your strategy. Short-term goals, use safer assets. Avoid equity-heavy exposure. Medium-term goals, balanced allocation. Long-term goals, equity and growth assets make sense. Time reduces risk. The longer your horizon, the more volatility you can tolerate. Choose your first investment. Now the most important question. Where should beginners start in 2026? Mutual funds? Start simple. Add complexity later. Don't over-diversify and buy too many funds. Consult with a financial advisor before investing. What about crypto in 2026? Crypto remains highly volatile and speculative, so it should not form the core of your portfolio. How much should you invest? This is where most people overthink. Start with what you can consistently invest. Even 5,000 rupees per month invested consistently beats 50,000 rupees invested randomly. Use this simple rule. Invest 20 to 30% of your income if possible. If not, at least invest 10% of your income. The key is automation. Set up SIP. Let money move automatically every month. You don't need motivation, you need systems. Build basic asset allocation. Once you start, don't put everything in one place. If markets crash tomorrow, would you panic? If yes, your equity allocation is too high. That makes it practical. Asset allocation matters more than stock picking. What to avoid in 2026? Let's protect you from common mistakes. Don't chase trending stocks. Don't invest based on Instagram tips. Don't panic when markets fall. Don't expect quick money. Markets will fluctuate in 2026 like every year. Volatility is normal. Panic is optional. Think long term. Wealth is not built in a day. Wealth is built slowly. Starting investing in 2026 is not about finding the best investment. It's about building a strong foundation, defining your goals, starting simple, staying consistent, and thinking long term. You don't need to know everything to start. You just need to start correctly. If you found this helpful, like the video, subscribe the channel, and comment below. Are you starting investing this year, or are you already investing? And if you want, in the next video, I'll break down how to build your first portfolio. See you in the next one.